Okay.
Is it recording?
It's recording.
Alright guys, so let me ask you a question first. What is the difference between regular funding and the hard money? What is the difference?
The hard money doesn't go through the government.
The banks and stuff.
It's not backed by the government.
Nope.
It's Washington money.
No.
I haven't seen them say that.
Okay. Nope. That's not the correct answer, I think. So.
Hard money closes out next, right?
Yeah, that's part of it. So this industry did not exist until the last crash. There was not really any hard money companies. That term was not even existed until, if I'm not wrong, until you remember the last market crash we had, was the mortgage crash?
2008.
Yeah, 2008. So before 2008, anybody could get the loan directly from the bank, but you don't even have to like show any documentation.
Mhm.
You can just do like, okay, this is how much make and produce a pay stub, and you get the loan. Where did that get us? That 2008, right? And originally our mortgage program was designed originally from 80s, because that was the American dream in 70s and 80s, to own your own house, right? If you look at the old commercials and stuff, that was a big thing. So that's why the government kind of like put these programs together so people can afford houses, right? So that's what the difference between us and like a third world country, like people have to pay cash. So when that crash happened, what happened, like everybody stopped the money. So if the money is not getting pumped in by the banks in the economy, what happens? Nobody's buying because nobody can get the loan. Nobody have like 100, 200, 300,000 dollars just sitting in an account to go just buy it, you know? That's not how our economy works. So, and if I'm wrong somewhere, you can correct me, by the way. I don't wanna
You're on
record.
track.
Huh?
Yeah,
I
you're
don't
on
wanna,
track.
I don't wanna record wrong information, cause I could be wrong
Crop
sometimes.
it out.
So that's where the private money and hard money in industry kind of born, like around 2009, I think, 2010, that was the time. But they were still, it was too high at that time. So that's why you didn't really hear about it much, because like people were paying like 3%, 4%, 2% on the interest rate, and we were like at 15 and 18% at that time.
That's right.
Yeah. So, and actually it used to be higher than that. So then they passed a law, like especially in Texas. I'm not sure if it's in other states are same, but at least in Texas, you cannot charge more than 18% on the real estate. So if you can't charge them no more than 18%, you have to keep your fees, your origination. Can I get a copy too?
You can
Is
take
this,
this one.
did he really just call?
Yeah.
Dude,
We can deal with them there.
he's insane.
Okay, so we can.
And that's called the usury law.
Usury
US
law, yeah, that's it, usury law. So basically, your fees, your origination point, and your yearly interest rate have to be under 18%. So that's why, I just want you to know that, like, so if somebody like on the phone tells you, oh, like, I paid this much, so I just want you to know, I don't think anybody, I can't really think of any scenario somebody gonna say they paid that high, but I just want you to know, at least, that's the usury law. We have to stay under that.
An example would be like a situation where somebody's currently in a hard money loan and they're trying to get their interest rate down, and they've already been feed out to the point of 18%. They're trying to get their rate back down. So you'll know that it's a very aggressive lender that they're stuck with, and it's a good product for a long-term financing situation. That would be their solution in getting their interest rate down.
Right. So now, even 12 years later after last market crash, we still have a lot of effects here. So banks don't lend money like they used to, you know? So let's discuss banks on one side and us on one side, so you can understand the difference, okay? Because I want you to know what you're selling. Because if you don't even know how good situation you're in, you understand? It's like if you're driving a Mercedes and you never drove a Toyota Corolla, you probably would not know. You will assume all the cars are the exact same. But if you go to Toyota Corolla and just ride that car for a day, then you'll appreciate your Mercedes a little bit better. So we're gonna do banks right here. And we're just gonna put X there, okay? So, I want you to be part of this, okay? So, banks have a lot of requirement and we have some requirement. So give me, what banks ask, the first thing, if you go there. Tax return.
Tax return.
So let me ask you, how long normally they ask for the tax return? How many years?
2-3 years.
You were 32?
Average 2 years. Some ask for 3, but 2. They go for 3, but if your income is low. But if your income is good, then they go to stick with 2. So let's just go 2 to 3. It depends on the bank. What is the second thing they ask for?
Bank statements.
The- Let me ask you guys, when they ask for bank statement, what are they looking for?
Like how the flow was?
And but okay, let's be
Okay.
clear. This is not a homestead loan we're looking at. We're looking at investment property loan, okay? This is an investment property. And you need money to fix it. It's a distressed property. I just wanna make sure that we're clear on this scenario. I found a property, it's $100,000, we need $30,000 worth of rehab, okay? So let's say the property is $100K and need $30K rehab, okay? So this is an investment loan strictly we're looking at. So what they're gonna looking at, Joe, how long will the bank statement they're gonna ask for normally?
3 months?
No,
No?
6 months
6 months?
or more. Because this is a business. They're looking at how much money you have in that corporation for last 6 months, coming in and out.
And the two main things they're looking for are reserves and seasoning.
Yeah. So they're looking for how much money you have in there right now and how long you had that money. One of the other things they're gonna look for is how much is your average balance in the last 6 months.
That's
If
right.
your average balance is like 2,000, 3,000, suddenly you put money, then there's gonna be more questions. But if your balance is like 40,000, 30,000, 50,000, so it's like going up and down, there's not gonna be question because when you have money, what you do, you put money back in, you use it, you put money back in, it's like a heartbeat, up and down, which is the how the business works. Okay, what's the other thing they ask for?
Liquidity?
Well, liquidity is kind of like your,
Did they ask for like credit? Check
Yeah,
credit,
credit.
right?
CRIDET, right?
EDIT.
Huh?
CREDIT.
Yeah, it's for credit report. What is the normally credit score do you think they require for investment property? $650, if, let's say if you have a score $650, right? And I have a score for $730. What is the difference when you do that for the bank? See, I'm not a guy who just say things and you guys don't remember, I like to engage people. So that's why I'm saying I want you to guys think. What is why, let's say if she is $650 and I'm $730 and we're at the bank, how does that affect us?
Your-
Look at you more
yeah.
because yours is way better.
But how does the bank see it?
That you've been
Responsible.
constant, like with paying your credit and.
No,
Not
No.
as risky.
I am low risker.
Oh,
She is a high risk, I'm a low risk.
okay.
Okay, so bank probably will offer me more than likely in the qualify wise, probably 5%. 5.6%, I probably qualify. She will be about 6.8% or let's go 6.6. Okay? So credit matters in the bank big time. See, some banks probably won't even do 650, they're probably like 680 or something.
That's right. 680, 720 is about the minimum at a bank.
At the bank anyway. So
No one
I'm being
knows
generous
that.
to the bank right now, but normally banks don't even do it. Okay, so what is the other thing they're gonna ask for? PSF, personal financial statement. Do they want a handwritten statement or do they want like a full detail?
And they probably want it from an accountant or
Yeah.
a tax attorney, somebody professional.
Yeah, they want detail from the accountant, that's very normal.
I wonder if people want to go to banks.
We're just getting started.
I know.
Yeah.
No, I feel
No,
better.
so I want you to guys understand, so how things works, because,
Yeah.
so when somebody try to bullshit you, you kind of call them their bullshit,
Mhm.
little bit, right? Okay, other thing, what else do you think they need? Entity docs. That's for corporation documents and all that. Then, what else do they need?
And real quick, the reason for that is because it's an investment loan, so they want to lend against a company, not just you personally. This kind of the degree of separation.
Well, I mean, company is just a extension of you,
Right.
but your main, what they're looking at is, they're looking at where do you live, you already have a homestead, and you can do only one house as a homestead, okay? What is it, do you guys know what his homestead is? Homestead is the house is your primary residence. And when you claim a house as your homestead, you can write off your interest. Like, so let's say I made $100,000 on my tax return and I owe $30,000 now. Or 30, like, normally actually you I come in at 18% tax rate normally. But let's say, I owe about 25,000, yeah, let's just keep it simple, 25%, which is. So let's say my house payment is 2,200 and my property tax is about 1,100, that brings you to 3,500. In my 2,200 tax payment, I think only, if I'm not mistaken, only the principal is like 400 or 500. Rest of it is pretty much interest. So if that house is my homestead, that $1,500 is a deduction each month. I think they changed it, I'm not sure because I haven't done my taxes yet. But I think now there's a limit, I think $10,000, but I'm not sure. With the, when the Trump Republican changed the tax law, I think there used to be no limit, but now there's a limit. So you can, so let's say on interest, that's $1,500, let's say, multiply by 12, how much is that, like $18,000? Right? So that $18,000 is my tax deduction, then I also deduct the property tax I pay, which is like $11,000, so how much is that, 26,000? Then insurance, how much is my insurance, maybe 2,000 a year, so 29,000. HOA is a deduction, but $1,000 is that's 30. Is there anything I'm missing?
Pretty covered, yeah. Interest tax.
So now that 30,000 is a deduction out of my taxes, so what is my income now? It's not 100,000, it's 70,000 now. And I'm gonna pay taxes on $70,000 income. So that's 70,000, let's say if I have children, I think you get like $5,500 or something per dependent tax credit on top of it. So that's how people do deduct all the things, like their living expense, some of them. And then whatever the amount is left over, that's what you pay your income tax on. So let's say I don't have any children, I think I took 30,000 out, so 70,000. What's my tax now? Before it was 25,000. Now it's gonna be about 17,000. So are you guys understanding what I'm saying? Because that house is my homestead. But you can do only one house as a homestead. You can do a second house as a vacation home, but I'm not 100% sure how you write that off. I think you can do some of it, but up to 2 homes, I think. If I have a house I bought a house, it's $100,000 house, and I gave it to Ashlyn to rent. Is that house is a write-off for me in my personal taxes? It's not. Okay?
Because you're not living in it?
Because I'm not living in there. But it is a write-off, the income I'm gonna make from that house, and because Ashley's gonna pay me rent, that's the income now from that property for me. So then I can deduct the payments and all that out of that, and whatever the money left over end of the year, positive cash flow what Ashley gave me, that is my income. Which is not that much normally, but imagine people have 100 houses like that. That's how they make their living out of it, you know?
And
So-
instead of a deduction on interest, it's deduction on depreciation, because you're living in my house, right? So my house is worth a little bit less because of the wear and tear of you living in that house. So that's a much smaller tax deduction than we would see with a
No,
homestead.
actually, it is not small, it is true, because you can depreciate the whole house in 27 years.
Right.
So you divide the house in 27 years. But that depreciation does not count on the real estate. Land don't depreciate,
Right.
but the houses do.
That's right.
You understand? The new houses are more expensive, the older houses are cheaper because they were expensive at that time, right? When they were built. So back to that. So now you guys understand what is a homestead and what is an investment? That's the difference. So there's only 2 kinds of houses, homestead or investment. So this is an investment. This is not where I live. This is not where I'm investing. I'm gonna buy this house, I'm gonna fix it now, I'm gonna sell it. Let's not even talk about rental. We're just talking about strictly rental. We'll just compare it later on a different day, or we can go over there quick later. Okay, entity docs. What else they need? ID. They need social security. What else they need normally?
That's the most, those are the main ones, and then it goes into the property
Yeah. Then they need a title need to be clean. Okay.
appraisal.
So now you understand? Let's, I'm not going to the numbers yet, okay? I'm just talking about well. So let me ask you, what do we ask normally? What is our requirement? Do we ask for tax returns?
No.
So, no tax returns.
Obvious.
So, that's, do we require bank statements?
Sometimes the 2 months bank statements, right?
No, we don't require.
I thought we did on one of them.
Rentals.
On the rental,
Oh,
we're
rentals,
talking about
okay.
fix and flip right now.
Oh, yeah, okay.
Okay, so we do not require bank statements. Do we require credit report?
Yes.
Okay. So this is the first one. Credit report. Oh, one thing I missed. Background.
Oh, background check.
So credit report, what is our minimum credit score?
600 plus, or unless they have an LOD.
So yeah, 600 is our basic. How much, let's say if somebody's not 600, is 590, can we do that loan?
If they have a really good letter of expiration.
That's one part of it. But sometime actually, we don't even need that.
Oh.
Because if this,
If it's like right under.
if it's right there,
Yeah.
at 5-10 points, we can push it. You understand?
Mhm.
What is the lowest we can go on the credit score?
540?
540. Do bank even gonna look at it?
No.
No.
You understand what I'm saying? I'm being very generous with that. This is to be 680 or more.
Oh,
So
shit.
we will even do up to 540, right? As long as they can explain us why. So let's talk about explanation. because I want you guys to think like an underwriter a little bit, like common sense. Why, what kind of explanation we can accept and what kind of explanation we cannot accept?
That sometimes they take money out, but that's why their credit goes low, but they're still paying.
Yeah,
You know what I
that-
mean?
We can accept that, yes, because a lot of time when you max out your credit cards, your score goes lower.
Mhm.
And you pay off your credit card, score goes up, we can accept that, because it's true. How about if that person had a bad accident, did not have insurance, and he have $100,000 medical bills? What we gonna do about that explanation?
Not helpful.
We would accept that.
We will accept
Because
that.
that's a traumatic life event.
Mhm.
It's not a,
It's
it's
not
not a
their fault.
reoccurring, it's not a pattern. That's the word you're looking for. is
We're
a
looking for
pattern.
his habits and pattern, we're not looking for some things, we're not gonna hold that
Once-
against
yeah,
him,
once-
because something happened to him, it's not his fault.
Yeah.
So we are not gonna hold that against him. Even his credit score is like, hospital doesn't care, but we do. Do you think bank will give him money?
No.
No. But we will accept that, because it was not his fault. Yeah, he didn't have insurance, but he did not, is the reason. It was a life event, you know?
How about multiple late payments?
No, because that's a pattern.
But multiple late payment, it depends how old it is.
Yes.
So
it's
if
like
he
a
was
reoccurring
late-
pattern, like where it's all the time though, you have one here like 5 years ago, now we see you did it 3 years ago, like you're not responsible.
And if you just have a couple of 30-day lates versus 90 or 120-day lates, then it's two different things.
Right.
And then on top of that, if you have a revolving late, if you're just constantly 30-day late, consistent, you're just behind by 1 month, that's not a pattern. That's not a pattern that will be a cause for denial. But if you start seeing 90 and 120-day lates,
Because that person doesn't care at that point.
that's right.
You understand?
Yeah.
So, do we wanna give him our money then?
No.
Probably not. Student loans, that's all. Do you think if he have student loans and he's not paying it, will we give him money?
Probably not, right?
Probably not, because if you can make $100 student loan payment, what makes you think you're gonna give us $800 payment every month? So now you guys understand the explanation a little bit?
Yeah.
How
What
about
if-
mortgage lates?
Probably not.
Probably
That's-
not, right?
that's
If
the
you don't
worst
pay your
one.
home
You're
loan,
not gonna pay anything.
your home.
No,
state-
actually, it depends on the situation though.
Yeah.
Because if you lost your job or you were laid off and you were 3 months late or 2 months late, but you caught up, we can understand that. But you just didn't pay, let it go foreclosed, we're
Right.
probably not gonna give you money.
And this is really important. When you get your borrower to fill out a letter of explanation, you don't want them telling the life story. They don't want to hear about the drama in their life. They don't want to hear this elaborate details. They want three things. They want what the problem was, what the plan is to resolve it, and why it will never happen again. Very simple, very clean cut, so that the underwriter doesn't find other things in that. Oh, I had an argument with my wife and I got a criminal charge. Oh wait, let me find out about that criminal background now. You know, so you gotta make sure that it's very concise and very to the point on how this will never become a problem again.
No, but it doesn't mean automatically if you have a criminal charge. Actually, we're gonna go to that in a minute, so I'll just cover that. I'll try to see if we have anything left. Late car payments. I mean, if it was late a couple times, but he's current, we'll kind of like even need why he was late those months. So you understand what I'm saying?
Yeah.
It
Like-
basically just comes down to the letter of explanation and.
It just have to make
Yeah,
sense.
right.
Think, you have to put yourself, this is your money, let's look at it that way.
Right.
Because we're using public money, so we have to see that money's our money.
Right.
So would you lend that guy anything, you would get concerned, automatically it's a concern for our underwriter. So just use the common sense. I don't want you to guys be robots, like what we're telling you to follow. I want you to just think. Because it's gonna be uncomfortable everybody. But that's the only time you're growing. So I want you to guys think through things. And you know, Paige, she's a thinker, I'm already learning that, you know? So, No, I'm glad you're a thinker. I need some more thinkers in my,
And you'd understand this, so you gotta remember that as a lender,
because I can throw ideas back and forth.
whose fiduciary interest are we working for? The borrower or the money?
The money.
The money. Even though we're servicing borrowers and we're providing a product to borrowers, we're working in the fiduciary interest of the money. So you always gotta think in the back of your head if you're bringing good clients to the money that's being provided.
And one of the reasons we want you to think that way, because what do you guys think? You guys gonna be a loan officer 10 years from now?
Probably move up.
I mean, you can make probably as much as executive as a loan officer because there's no limit. But more than likely, if you're gonna make that as your career, and let's say you stick with our company, probably in 2 years you won't be doing that. More than likely, I'm gonna be having you doing something totally different in one of the management positions. But you need to know these things. How would you explain that to them when you don't know?
Right.
That's why I want you to just think through everything. Think like this is your own money. Let's think about you have $500,000 sitting in your IRA account. You cannot touch it until you're 62. But you want that money to work for you. That's what our Quest IRA does. People have like $2-3 billion sitting there. They use their money to lend out and take interest back because they want that's their retirement money. Okay, so credit report, personal financial statement, we do need that, right? But what is the difference between their PSF and our PSF? We don't need accountants, PSF. We have a small sheet. We basically have them fill that out. It's even half page actually. So you just have them fill that out. So we just go with that. And why do we need PFF?
This is not work. So I'm trying to check on an appraisal, and every time he gives me the password, it never works. No, I know.
One thing at a time.
So in the PFS, we want assets versus liabilities. What do they own versus what do they have to pay for?
But one of the key words on our personal financials, we want to know how much cash, liquid cash he have, because we are not asking for bank statements. You understand? How would you know, like, how much money he have? So we see at the personal financial statement how much money he have liquid in his account. So let's say in his personal financial statement, and he puts he have only $3,000. Does that raise any flag for you guys?
No.
That's why I want you to guys just not take it and send it. I want you to read it. Because I don't want you to be wasting your time. Your time is the most important commodity. So if this guy have only $3,000, you calculate he had to bring about $11,000 on the closing. What you think? You're gonna ask him,
Yeah.
hey, I don't think you have enough liquid. How are you gonna come up with the money at the closing table? He'll give you explanation probably. More than likely, you're gonna need that in writing for the underwriter, because underwriter is going to ask you that. Like, he doesn't have enough money in this statement, where he's gonna come up with the money for the closing, right? So we're gonna need a PFS, but a small, okay? Do we need entity docs?
Yes.
Why we do loans only on entity, not on personal names?
Less risk. Less risk.
That's part of it, because foreclosing on an entity is a lot easier than a personal, because let's say if I'm going to a foreclosure and I file a bankruptcy, what happens?
You won't get
That
your
stops
money.
everything.
Yeah.
No, we'll get our money, trust me.
If
in the
you're
end.
against a person,
Yeah, if we're not going against the person, we're going against the property.
that's what I'm saying. If you go against a person, you probably won't get your money back,
Yeah,
right?
yeah, I mean, that's a different topic. We're trying
That's
to.
right. And that goes right back to the fact that this is an asset-based loan. That's why you don't see a lot of these personal requirements, because we get our money back out of the equity in the property.
Right.
There is equity, there's value in that house that allows us to get our money back.
So do you see why bank is asking so many more things than us?
Yeah.
Why? Because banks look at totally different. They look at their relationship, they look at person, credit, and they look at the asset. Banks secure this stuff more. We're a little bit more like a gamblers.
No.
Right.
We're risk takers.
So
Because
bank-
we're Wall Street. Wall Street is a risk taker.
Yeah,
in
so
the end.
the bank is 80% personal and 20% on the asset. We're the other way around. We're 80% on the asset, 20% on the personal. So the deal has to make sense, and then we look at the borrower. It's-
Yeah, exactly. Deal have to make sense first. So the reason we're doing entity docs, because we wanna, if we have to foreclose, is a lot easier. We can close in like foreclose in 21 days, I think, in Texas. If let's say if the property is on his house, is on his personal name, he can call it a homestead. There. But he cannot call this house homestead because it's not on his name, it's on an entity.
That's right.
Do you guys understand? Because when the house become homestead, there's a lot of federal laws kicks in.
That protects
That's why-
homeowners from getting foreclosed on because of what happened in 07. Banks were snatching properties from the houses they were living in, so now there's homestead laws. That's why we go to the LLC.
So loan officers did not require a license before 2008.
Yeah.
Now they do, only for homestead loans. So that's what you would be learning in a class, but you would not be learning this side at all. You'll be learning more like to deal with, it's more disclosure basically, and we don't really have that many disclosures. So that's why we like to keep things simple. So that's why entity. Okay, do we ask for ID?
Yes.
Okay, we do ask for ID. Why do we ask for ID?
Gotta know who you're working
Exactly.
Yeah.
We don't want Tony to be using Ashley's ID, but like we've been talking to a guy on the phone, that's a girl.
Yeah.
Okay, oh, that's my girlfriend. Okay, we need to talk to your girlfriend, not you.
Yeah.
You guys understand? So we want to make sure there's no identity theft.
Mhm.
Same thing for Social Security.
Mhm.
We have to make sure that we're talking to the right person. Background check. Do we do background check?
Yeah, well, with the credit
That's
pool
right.
and everything.
Yes, we do. No, I mean, it's pulled together, but it's two different things.
Yeah.
We do background check. Why do we do background check? Or what we look for?
We'll see if they've done any fraud or
Right.
Any
anything.
other past.
So let's say there's a gentleman and he had a felony on his record for family violence about 6 years ago. Would we lend him money or no?
Yes.
Yeah, I mean, if it's just his family.
We're probably gonna need explanation.
Yeah.
Yeah.
If it's
Violent
like
crimes
mortgage
are-
fraud or
but
something.
more than
For
likely-
us, violent crimes fall under fraud and other,
Mhm.
it's just as high of a level.
No, but I mean, that's not automatically
Right, you have to get an
denial.
explanation, you know.
Yeah.
and then-
explanation,
See what
because we
happened.
all been through different troubles, some lifetime people have a DWI,
Mhm.
right? It's mean their life is over?
No.
So the reason I'm being specific about this, so one guy have a family violence case. He did his whole thing, basically he did his probation and all that. But he still have felony.
Hmm.
But then we have one other guy. He have a felony too. He was in prison for 20 years because he killed someone. Are we gonna give him money?
No.
No.
More than likely not. I mean, personally. he
You would
served
be
his
like,
time, I
what's
would
your
be different.
explanation?
I think different, I like to give people chances,
See,
personal, that's
I
me
told
personally.
you it's gonna be like.
I like to give people chances.
Why did you kill
because-
that person?
No, there's no explanation you can ask for that. But let's say if the guy have a felony for financial fraud 10 years ago.
That's a hard no, all across the
No.
board.
That's right.
So you guys understand what I'm trying to teach you guys?
Yeah.
Yeah.
Even if you have a felony, you probably will give him money because it was not a financial fraud.
Mhm.
Because we're doing a financial transaction.
And the 6 years is a good trick question that he asked because some of our funds have a 5-year statute of limitations, some of them have a 7-year, some of them have a 3-year. You know, so even within that realm, Some of them might fall out of the statute of limitations
Yeah.
and still get approved for the loan.
Yeah, you just have to go to the detail at that point.
But remember, if you didn't put that letter of explanation in the application, your underwriter is gonna rain down on you, asking for
So that's why
explanation.
you wanna know these things in advance.
Yes.
Before you even send it, because when he's gonna send it to you, you're gonna be busy, it's gonna take you 6 hours to get to it, then you have to send it to him, he have to, like, that just wasted 2 days
Correct.
in the one paper. So if you just go through before, that's, you know. So let's say, let's do an example. Let's say I'm going on a date with a girl, and a night before date, I just Googled her, like, and I found out this girl was stalking her ex-boyfriend, and she stole money from his ATM and all that. I'm just giving you an example. Or let's say if I went on a date with her, date went very well. Now I'm going on a second date with her 3 days later. Well, I'm just curious, I'm trying to find her social profile or something, but I got some other information across me. Like, she was arrested, she stole money from her last boyfriend and all that.
She never
You-
told him.
And she never told me. She was so sweet and nice and told me her last boyfriend was whatever. Should I be going on a second date with her?
Knowing you would be like, what happened?
You just always want an explanation, because even the craziest thing,
I love
knowing
crazy.
Lifetime Movie Network, there's always a crazy
I understand.
explanation.
Yeah.
I understand. So that's just the one scenario. I can ask her for an explanation. Scenario number 2, this girl just got out of prison because she killed her last husband and she was there for 10 years.
I mean, no.
I'm just saying, yes. Do you think I should go on a second date with her and
No.
ask for explanation?
No?
I probably won't.
I think I will run
Yeah.
because I don't want to be the victim number 2.
Yeah.
She was in a jail for a
10
husband,
years.
and now
Yes.
it'll be a date now. You understand what I'm saying?
Mhm.
So it's just exactly, you have to look at it that way. You understand? Like, some things you have to just think. That's why I keep pushing common sense.
Mm.
I don't need bunch of machines here. Like you guys, I tell you guys, listen, I want you to guys think your own. Make a sense out of everything, because once you start doing that, I'm telling you, the biggest problem gonna get thrown at you. Once you get this habit to make sense out of everything, you can solve every single problem. You would not freak out. You're not gonna have these panic and anxiety attacks anymore.
And you also
Just make a
focus
sense
on
out
the
of it.
good. You focus on the good borrowers and the good deals because you can feel that it's a good one instead of wasting your time with all these other people and using all these company resources to get us through just to find out that that application is not going to get approved.
I mean, we are very lenient anyway. Like the people we're giving a loan to, banks won't even look at them.
Mhm.
Yeah.
But I want you to be not wasting your time.
Yep.
So that's one side, okay? Okay, we're gonna move on to, do we have a bigger one? I'll just choose you.
I've got a spray that I like that off.
I'll just choose this.
There might be crew cheese on it.
Is that even a white board marker?
Probably like a spray.
Is it a whiteboard marker?
Yeah.
No, the other one.
The red one? This one, I think, yep.
Is it a whiteboard marker?
This red one?
Okay, I'll say dry erase.
I think it looks.
Dry eraser, yeah.
Who makes these markers? They
This
suck.
is, this is not good, no?
Right.
We have one job.
We're gonna do both.
For both?
Here, I'm gonna give it to you.
Okay, now we're gonna move to phase 2 thing, okay? And we're still talking about, fix and flip. Okay? So, we're still talking about, there's the house. We're buying it for 100K. No, this marker is not working. Just one luck.
There's the last one too.
Oh, me, I'm very lucky. So it's 100K the purchase price and he need rehab. Let's say 35K. Okay? You get it? You find your house. This is the same thing we're looking at, okay? This is at page 2. Right here. This is the bank. This is X right here. So now, let me ask you guys, how much bank will give him on that money? How would bank look at it? He need actually, total deal is 135,000. 100,000 is to buy the house. And 35,000 to rehab. I missed one part. You guys know ARV, right?
After repair value, yeah.
What is after repair value?
What it's worth after you do all the fixes and everything. And all the rehab.
So let me ask you, is ARV is pretty accurate normally, or is just a guess?
It's like a rough estimate, right? So,
There's no such a thing, ARV, in the real life. People use that term. You never know. You can guess it with the comp how much it will be, but that's never a guarantee. So that's one of the things, like a lot of people gonna throw at you. Oh, do you go with the loan to cost or ARV?
No.
That kind of tells you they don't want to put anything down. No, my deal is so good, and they make up ARVs a lot of time, fake numbers. Like let's say this property, real RV, real ARV should be 210K, okay? After we do this. But if I don't want to put anything out of my pocket, I probably will try to tell the lender this ARV is 250.
Oh.
You understand what I'm saying? Because a lot of times you're gonna come across. So every time a person asks you, oh, do you go with the ARV and or loan to cost? That should be a little red flag for you. I'm not saying you can't do the deal, but remember that a lot of guys will ask you that question. Oh, do you go do your loans with ARV or loan to cost? And then they'll say, oh, I talked to a lender, he does it with ARV.
Okay.
Yeah, we look at ARV too, but we are not a private lender, we are a public fund. And let's discuss that. What is the difference between a private lender who's in Houston and a public fund like us? What is the difference?
where the money comes from?
Well, we use the Wall Street money.
Oh.
A private lender have like a $3-4 million, maybe he gets from a bunch of investors. He will do 100% deals. But who he's gonna do it with? Let's say if Paige, I'm a private lender, and Paige done 5 deals with me and she always paid me on time, and she put 20% down or 10% down on those deals, and a 6th deal, and the numbers are good, do you think I need Paige to put any money down? Probably not, because I already know Paige is always good. She never screwed up so far. She always paid on time. I will give my trust is there, but I'm a person. I know Paige personally, right? But can offer that after 5 deals to Paige.
90%, right?
We can 90, but we cannot do 100. Why is that?
That's too much risk. We don't want to put all of our money in
It's not even a risk right now we're talking about. So let me go back to a private lender. A Paige, I'm giving 100% now. Itza contact me and she lives in Atlanta. And she done 5 deals. She's sending me all the herds and everything. And she said, I'm buying this house, real good deal. I looked at the numbers look good. And she wanted me to give her 100%. Do you think I'm gonna do it? It depends if I know Atlanta or if I do it. No, more than likely 99% a Houston local lender would not do a deal in Atlanta or New York or other, because he doesn't know if it's messes up. He have to go to Atlanta, and then he have to figure out what he's going to do with that property. So what he's going to do? Option 2, or he might say, no, I'm not going to do. I can't do Atlanta. Let's say when he's open to do Atlanta, he's going to say, okay, I need you to put 30% down. Because I don't know that market. The risk is too high. Well, let's go back to Axe. Axe cannot offer Page here 100%, but Itza contacts us and she goes, "Deal, we'll give her same money, 90% too. Just we offer to Page." Why is that?
Cause I'm in Atlanta, maybe, no?
Because we're a national lender. That is the difference between a local private lender and the national lender. We could have, we had a choice last year, 2 years ago when I started the company. Do I want it to be a local, just a small lender, or do I want to go Wall Street big time? You can't have everything. You heard that term, you can't make everybody happy?
Yeah.
This is true.
So you have to leave someone on the table for the people, right? We picking up the people, banks can make them happy, right? If you look at it, we are picking up the business, banks don't really touch. But we're probably gonna have a leftover business too, which probably private lenders will pick up. So that is the difference, because we are national, so our guidelines are exact same in Atlanta or Houston. Let's say I do a special deal and I give her 100% from the same fund. You think if it's a fund, or she can sue me for that?
I think so, cause you're doing national funds, no?
It's can probably sue me for that. I don't know if it's gonna stand or no, but she have a good decent grounds to sue me. They're like, listen, Page had 5 deals, and he gave her 100%. And I had 5 deals. Look at that, I have a record of 10. He gave me 90%. Why did he give 10%? Like, Page had to come no money out of the pocket. So you guys understand? Because we are national, so there's a little bit more responsibility for us. So that is the difference between private lender and hard money, kind of. So let's say bank, he said the credit checks out and everything, we can do this loan. Bank is probably gonna, but first of all, banks don't like to lend. 90% of the banks would not lend on a house which is not habitable. You guys understand? If it's not habitable, they probably won't lend on it, because they wanna make sure, even let's say it's habitable, but it's old. Bank is not gonna go with this number, they're gonna go with the valuation now. So we can order appraisal. But even the appraisal come for, let's say, 130, as is, he bought it cheaper, 30,000, bank's still gonna go with his cost. So 100,000, so bank probably will offer him, it's an investment property, probably 75%. What is the 75% of 100 is 75,000? So that's how much bank will offer him. How much can we offer on that house? X, on the cost.
90% plus full rehab.
Yeah, we're gonna get to that. Let's say if you've done 4 or more deals, we can give you 90. So now, we offer him 90,000 on this deal. Rehab, how much bank will give that guy rehab money?
Yeah, what do they give him money?
So, 0. How much we will give him in the rehab money? 100%. So now, we just gave him, we offered him 35K. Who's gonna pay for the closing costs? The bank will give him credit, or he have to bring it on the table? He brings it. So, you have to bring closing costs. How much origination point bank's gonna charge? Average 2%. So with us, you have to bring closing, and we will charge 2%. Same thing as bank, pretty much. Right? So let's count, I'm trying to see if I'm missing anything. And pretty much everything else is same, insurance and title have to be clean and all that, right? So let's say how much this guy have to bring on a table with the bank and how much he have to bring it on us, okay? So he have to bring on 25,000 for this, because what he showed. You have to bring 35K rehab. What is the closing cost do you think should be for $135,000 deal? Also about 2,500. So 2.5K. What is origination for 135? Let's say 2,400. So can somebody add that? 35,000, 25,000.
Your phone's already locked. Real quick.
So 25,000 plus 35,000,
That's 70 or 65.
2,500,
That's crazy.
2,400. So he have to come up with 64,000.
Why do people even go to banks? That's ridiculous.
But people do.
I'm not worth it, but I have not.
64,000. I mean, that's why I'm glad Paige brought a very good point today. I didn't know that, so now we know it.
It just helps when you can visually see it, you know,
Right,
when you're
right.
like explaining it, you know.
I understand. So now, how much you have to bring on the table? 10K here?
Mhm.
How much you have to bring on the table? 0? He does have to bring that, which is 2,400. And the closing cost, 2,500.
15K.
Yeah, 14,900. That's what he have to bring it to us on the table, that's what he have to bring it to the bank. Which deal would you pick? But there's a difference. Bank is giving him money for 6.5%, we're giving him money 10.25%. You understand? So we are higher.
Yeah, but you don't have
But
to
how
come up
long he
with
does
that.
need that loan for? Like 4 months? So does that even matter? Because after he fixes that, his house value is 210,000 or 200,000 or 220. It's gonna be somewhere like that. He can go to the bank now and say, I need a cash out. Or he can come to us again for a cash out. Now we're gonna evaluate the deal not at 100,000, 210,000. So more than likely, we're gonna pay off his loan and he probably will walk away with $20,000-$30,000 in his. So let's say he cash out and take 25,000, all that out, his down payment. Let's say $5,000 his interest payment. He still have like probably $3,000-$4,000 left and house is for free. Are you guys getting? This is the trick, how people do things. That is the difference between the bank and us. Now the next step is, what is different between our program and Jet Lending or Civic or anybody else, you understand? That is a different conversation, but I want you to guys understand the main difference. I'm gonna do really quick now, before we move on. As a buy and hold, okay? So now this house, we talk about same house now, right? So let's say I bought this house and now this house is 210,000, right? I own it. And Axe, basically I went with that Axe and I got the loan with Axe, okay? I decided I'm gonna put it as a rental property. And I got that house done in 4 months. It's ready to go. So I go to the bank. What bank's gonna do? Bank's gonna order appraisal. we're talking about buy and hold now, okay? The second program. Because first program, it's the same property. So I'm making you guys understand, you can guide your customers that they can do it both programs with you, one by one, on the same property. So, the bank order appraisal, we order appraisal. Do we need, do you think the bank need, bank statements? Yes. So, bank statements. I'm just trying to cover both programs today so you guys understand the basic now, you know? We do require bank statements. But bank probably requires 6 months. I think it requires 2 months.
That's right.
Right? Bank will require tax returns. When bank will require tax return, do you think it's gonna ask for only personal, or it's gonna ask for company also? Both. So, personal taxes and business taxes, okay? My spelling sucks, by the way, in handwriting. Do we ask for tax returns? No. Either, right? We don't ask for it. Actually, I'll just more for it. Do we, the bank will ask for PSF? PFS, sorry. We ask PFS, right, on buy and hold? I haven't done one on design, I think you
Yes.
do. But bank will probably more than likely want a personal financial statement for your personal and business. We're just asking personal. Does bank want personal guarantee on the loan?
So using the property as collateral, is that what you're saying?
Property is a collateral, but there's still, if you don't pay and there's money left over, who's gonna pay for that? If we sell the auction off the property, because banks and us, we're not in the property selling business, we are lender. We don't know who is the best buyer for it. Whoever gives the most money at that day at the auction will take it. So let's say if the property get foreclosed for somehow and there's $30,000 missing, we didn't get it, who's responsible for that? That person. That's the personal guarantee. So he's gonna pay for that, whatever our property don't cover. So they will ask for personal guarantee. How does this spell? Do we ask for personal guarantee?
No.
Yes.
No,
And no.
yes.
With us, customer have option. If he wants the lower rate, he does have to give us personal guarantee. But if he chooses not to do personal guarantee, interest rate will go up 0.35 high.
0.75.
0.75? You sure?
Mhm.
0.75, that's a big jump. So,
We call that non-recourse. It's a non-recourse loan. So when you look at the underwriting, remember? Yeah, you see that underwriting guideline, it'll say non-recourse or recourse, it'll give you the
yeah,
adjustment.
that's what I was about to get to.
I was wondering, cause I had that guy ask if we did non-recourse loans on the trust, so it's,
I don't know if we do it on trust.
you said no.
Only if it's revocable. A revocable trust we will, an irrevocable trust we won't.
My knowledge is not that high when it comes to trust. At least I admit what I know, what I don't know, right? So, we give that option to the customer, they can make it recourseable and non-recourseable. That's, so you guys know the term now, non-recourseable option. Everything is automatically recourseable, but they have an option to make it non-recourseable. But interest rate, the payment will go higher.
Do you know why somebody wants non-recourse?
No.
Because we only are able to take the asset back. We can't go after their personal assets.
Not only that, it doesn't go on their credit.
That's right. That's the big, yeah.
So if we take the house back and we foreclose on it or something, it would not go on their credit. Even we lose money, we can't go after them, neither is going to report on their credit. So we offer that options. Do bank will require a lease on this house? Because bank gonna ask you, why do you need the money for this 30 years? Or 5 years, 7, whatever. More than likely, they will ask for a lease.
That's right.
Because they have to calculate DSCR. Because they have to see, depends on your income. If your income is really high, you can support a second house, then it's different, they look at it. But if your income is barely, you can cover your own mortgage and all that, you have just a little bit of money left over. So how do you think they're gonna pay for it? So bank have to see the DSCR, debt to income ratio, on your income. So
So what does DSCR stand for?
That's something credit ratio.
That's right, debt service coverage ratio. It makes sure that the rents are covering the interest and taxes and insurance. Debt service coverage ratio. That's important because when you look at that underwriting guide, you'll see 1.0. That's our requirement. It has to at least pay off the bill for the house.
So, do we require a lease? It's a buy and hold program. Do we require a lease on our buy and hold?
No.
No, that's correct.
No, it depends, still. So if you look at the last hard statement on that house, if he bought that house, and remember I specifically said I had that house for 4 months. I didn't say 6 months or 8 months, that's why I want you guys to pay attention, what I'm saying. I said specifically 4 months, I finished that house in 4 months, that's why I didn't go to a property B. I stick with the same property, but we just went over on fix and flip. 4 months. Now, I decided to rent it out. So now I'm just reminding you, and you say, let me ask them, do I need a lease or no on this house?
If it's for 4 months.
I had it for 4 months, but now I still have 8 months left on my loan, but I decided to rent this house out. So to come to Axe and get a loan from Axe, do I need to have a lease on that house to show how I'm gonna pay for it? Or Axe requires it or it doesn't? That's what I'm asking you.
Like someone couldn't be living in it. No?
No,
After
you look at
I just
it.
fixed that
No,
house.
The owner can't live in it.
Okay.
All the kind of, okay, so nobody knows. I'm glad that's why I'm asking you questions, so I can, I'll see how much Jonah trained you guys. Jonah, you're doing a terrible job right now.
But wouldn't that come with the, like, scope of work and all the plans and stuff? You would
That's already
state-
done. That's
Wouldn't you
already done.
state though that this is specifically for like a investment, so I'm gonna rent it out? That's how I'm gonna pay for it. Wouldn't you state all that?
But how are you gonna pay for it?
If you have a renter, right?
But that's what I'm asking you. I had this house 4 months ago. I bought it. That transaction that we just did, that was 4 months ago now. We are in future.
Right.
Now I need to get a 30-year note. I'm comparing to the bank with Axe. Bank does require a lease. Does Axe require a lease?
Yes.
It depends. Okay. Okay? If I bought this house within 6 months, you do not require a lease. If I took 7 months to finish that house, yes, then Axe will require a lease. So technically, first 6 months is like a grace period. We will give him 6 months, not to, we don't worry about 6 months. Right? So if, so lease is, depends, okay? 6 months. So 1 to 6 month, no lease, okay? 7 to 12, yes. Or whatever the terms are.
And so why do we do that? In the 1 to 6 months, we figure they're doing the renovations on it. We're giving them grace period to get the tenant in there. So what we do instead is on that appraisal, we'll add a rider. We'll tell the appraiser to evaluate what the rents are in the area. So this is leased rents versus market rents. So we will still say, well, the market.
Well, we have to do it anyway, and we have to do that either way anyway. We have to ask the appraiser to give us an analysis of the rent in the area, because we wanna make sure the rent he's showing us on the lease and the rent in the market is for the same house in that area is same.
Right. If it's a 1,300 a month area and he's taking $1,000 lease, we don't think he's a smart investor.
Yeah.
So the appraiser is what's helping us protect ourselves on that part of
But
it.
the second option is, let's say, okay, let's go with that. What he just talked about. Because, hey, I'm glad. I want you to throw a couple of curveballs so we can discuss different scenario. He is taking $1,000 rent. This house is leased. So he's taking 1,000. Can we still do that loan?
No.
Yes. You know why? We can't offer him 80 or 70. We have to offer him less money to keep his payment under age 75. And age 75 have to include property taxes and insurance. So if we offer him age 75 on that deal, if he comes down to, he probably getting 50% on the value. So his rent and his credit are the two main factors will be for his interest rate and how much can he get. If his credit score is higher, we're pretty similar to bank here because we're both doing 30-year notes here. We're just requiring less things. Okay? So, and this is a refinance loan we're looking at. So we can go either way. As long as his payment and his taxes are a lot lower, I think it's 1.25, which means 125% of his payment. Because we want to make, why do we want a little bit extra money he should have left over?
I mean, we're making money off of the interest, right?
No, but we're not talking about him, we're talking about us, we're talking about him,
Well, he
the
needs to
borrower.
make something too, right?
Not even, he doesn't care about making money. So let's say if his tenant calls 3 months from now and a toilet broke. Now he have to send a plumber. And the plumber will charge him probably $300 to fix that. You understand what I'm saying? He have 25% left over every month,
So it'll be.
about $250. So
Maintenance.
that maintenance, so he can pay for the maintenance. See, you have to calculate, you have to remember that in your, like, kind of that. So let's say they said, no, I don't want 50%. I want more money, and now his DSCR is 0.85%. It's not 125, 1.25, 125%, it's 85% or 0.85. Can we do that loan?
Say it one more time.
So let's say I say, no, I don't want 50%. I need 70% on this loan. So let's say if we calculate the number, if it's 70%, his DSCR comes down to 0.85. So technically, he had to put $150, his payment's gonna be $150 more than his income. Can we do that loan still? Yes. It's just a high risk
It's
loan
just, yeah, it's
now.
just gonna be a risk.
Because we do remember that this lease is more than likely is for 1 year. More than likely, his next lease, he will sign it for more to cover that. So it could be temporary, so as long as he have enough money in the statements, in the account sitting there, and he can cover that, we're okay with that. But it's still a high risk loan a little bit now, so we're gonna probably raise the interest rate a little bit. Is that making sense, everything?
Yeah.
Okay, so basically, this is what we require, that's what the banks probably require. So a lot less, I mean, but this loan is very similar, interest rates are pretty similar in 6-ish normally. Why in investment loan, interest rates are 6-ish or 7, and homestead loan normally when you do is in 3s or 2s, why is that, or 4s?
For longer.
Hmm?
Lease? I mean, longer one, what am I trying to say?
Because there's a reason the interest rate is a lot lower for your homestead loan than the other loans.
You're just spreading it
Because
over.
those loans are going to Freddie Mae, Fannie Mac, which is backed by US government. I think it's a bond,
Right.
backs it up. Like a dollar bill, that backs it up, the value. But when it's an investment property loan, that loan does not go to Freddie Mae, Fannie Mac normally. It can, but normally it can go other way too. Why can't we offer less options on the same loan than a bank? Because we choose not to go Freddie Mae, Fannie Mac, we're gonna go to a Wall Street. We don't have any regulations on that.
Private versus public is the term on that.
You understand, you guys understand? So, do you guys have any questions, anything I kind of like left over? So you guys kind of get a better idea now
Yeah.
about the two loan programs?
Yes.
It's much better to like visualize issues, right?
Yes.
Than
Well, I
being
mean-
We never really
told-
sat down like this and like,
He kinda just tells us or does it
you
for
know,
us.
we're like, oh, you know, all we've been
No, it
focusing-
is a lot my fault.
focusing
I
on
should have
is
done it.
Facebook and LinkedIn, and then I'm like, I had to sign up
Marketing's
for
a huge part, but we need to
Can
know.
you stop the recording? It's been too long probably already.